Well, the credit markets, first of all, the overall Indian credit market is about $2.8 trillion, and it's about 50% of GDP, which is much lower than some of the other comparable markets. To give you some data points, even the Korean market is three times that size, or the Chinese market is four times that size. So we have a long way to go with regard to the credit markets in India, and given the fact that the central bank wants to ensure that the banks in India are doing the basic banking stuff, banks have actually been ceding space to non-bank financiers in the Indian market. Last year, approximately 38% of the kind of credit transaction that we look at were executed by either funds like ours or by non-bank finance companies, and that is continues to grow. So the opportunity set for any special sit financing or a solution capital provider, as we would like to call it, is very, very attractive and growing significantly.
Sri, I was in India in February, and we are seeing a clear path towards fiscal consolidation. The markets like that. I've also been hearing about the disinvestment trend, the privatization process as well, and how we could see consolidation amongst the PSUs. Does that create some opportunities in the credit space, thematically?
The government sell down is essentially likely to be in the public markets. It's highly unlikely that the government will do a strategic sale of any of the assets that they own, other than one odd exception here and there. From a overall financing and the balance sheet of the government's point of view, I think we are in pretty good shape in terms of both tax collection, on balance of payments, as well as fiscal deficit. So, India is currently going through a situation where corporate debt levels are at very, very acceptable levels. Over the last 7 or 8 years, most Indian corporates have shed debt, and the debt equity is about 1:1 right now. Inflation is under control. Growth is so this confluence of factors is pretty unique in the last, let's say, 15-20-year history in India. And so that provides different kinds of opportunities to players. As far as credit is concerned, the opportunity set for at least special sits or high yield players comes on account of the fact that the banking sector in India is pretty restricted, and the central bank does not permit the Indian banks to provide various kinds of financing, which would otherwise, which could otherwise be available in other parts of the world. For example, Indian banks are not permitted to provide acquisition financing for Indian companies, and that again provides an opportunity in a market which is a growth market.